and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock related queries. In a short while from now, we will connect with our experts and try to get as many queries as of yours being resolved during the show. But before that, let's have a look at what the markets are up to. So Cheryl, market seems to be sinking lower, and yesterday we have seen an outperformance from Bank Nifty, but today that seems to be underperforming.
Absolutely. A very good morning to you, Shrishti, and a quick note for all of our viewers who are tuning in. You know, this time around when you are writing your queries and the messages, you can also tell Shrishti not to wear the color red. So this time it's not me who's wearing the shade of red, and because of which the markets are twinning me. It's Shrishti today who's wearing red. And yes, the markets are drifting lower, 0.5% downtick coming in for the benchmark indices as we speak. If you look at Nifty Bank, that's the one that is underperforming the benchmark indices. Nifty Bank is seeing cuts of almost about 0.7%. Remember, globally also banks have been underperforming. Remember that Moody's day for yesterday actually came out with their note where they downgraded the small and mid-sized banks in the United States and some of the regional banks as well. And that effect we saw in yesterday's markets, that's the US markets, it drifted lower on back of that note. And also this morning you have a lot of Asian banks that are trading lower, and Indian banks also are actually joining the suit. So that's the reason why you're seeing even Nifty Bank underperform the benchmark indices as we speak. Let's take a look at what the broader markets are doing, because when we opened up for trade, it was the broader markets that were trying to hold on to some sort of a shade of green. So mid-cap index and the small-cap index, now they've also given up their gains. They are also in the negative territory as we speak. Let's talk about the list of gainers. Then it's Dr. Reddy's that's leading the way. It is the top gainer on the Nifty as we speak. In fact, Dr. Reddy's today has hit a fresh record high level on an intraday basis. So that is Dr. Reddy's for you. They're seeing good strength. You have Tech Mahindra also 1.5% uptick in that one. 1.4% uptick in Mahindra, Bharti Airtel, BPCL are the other set of gainers in trade today. But on the losing side, you have Divi's Laboratories, top loser on the Nifty, 2% downtick for Divi's, Hero Motocorp, ICICI Bank, Reliance Industries as well as ITC that are declining in trade. And remember, Reliance Industries also could be seeing some sort of pressure coming in from Jefferies India strategy note, where they've actually made some strategy shift where they said that they have moved 3 percentage points from Reliance to banks in their model portfolio. So that also could be a reason why Reliance Industries is declining in today's trading session. Let's take a look at what the sectoral indices are doing and what sort of a print we have when it comes to the sectoral front at this point in time. And it is suffice to say you have IT index that is trading marginally negative as we speak. We'll also have some red on the screen for auto also, but as you can see, IT index is actually trying to hold on to some sort of gains, or rather is trying to actually recover some sort of losses in today's trading sessions. That's the way how the markets are looking like at this point in time. Shrishti, Realty Index is the top sectoral loser, shade of red, but hopefully we should be able to try and recover.
Shade of red, definitely, Cheryl, but that was you who started the trend by wearing the red color, and let's see how the markets pan out and hope that the red color is not in all our viewers' portfolio. But let's understand that what is the market outlook going ahead. And Kunal, coming to you for to resolve that, how should one read the market movement, because we are seeing that from the 20,000 level on Nifty 50, we are seeing drifting low, and today we managed to break that 19,500 level as well. And even that Bank Nifty, there seems to be no stopping. So do you believe that the trend has changed, or it is some bit of a profit booking or a correction that one should read like?
Good morning, first of all, to everyone. Now, you know, the first wave of a downtrend or a reversal actually starts off with profit booking more for many of the stocks. So what we have to look out for is that how in the last 10 odd days, I think 20th of July is where we made a high on the index at that 90,990 odd mark. And from there, we've seen that the first leg of correction happened in the large cap names. So there was a lot of profit booking across the board for large cap stocks. Then the move started off into a larger cap, rather into a mid cap, small cap correction, stock specific correction. Now we are on the verge of breaking down on a major support on the index, but that still is I think around 100 points on the Nifty. 19,300 is the major support. This is where we we bounced off, I think last week after making a low of 90,300 or slightly below those levels. So that could be the most important support point. Only a break below 90,300 mark is where I would believe that the pace of selling for stocks as well as for index should accelerate on the downside.
All right, so that's the take coming in from Kunal on the markets, and as you can see, Nifty Bank drifting much lower than those earlier levels. But let's bring on board right now the management of Gujarat State Fertilizers and Chemicals to talk about their earnings going forward. If you look at Q1 earnings, the PAT and revenue are pretty much weak. But let's talk to the management to understand what else contributed to this sort of a number in the quarter gone by and where they see the road ahead. We have Mr. V.D. Nanavaty, who is the ED Finance and CFO at Gujarat State Fertilizers and Chemicals. A very good afternoon, beg your pardon, good morning, sir. Thank you so much for joining us on ET now. Let's firstly talk about your numbers. Yes, you posted a weak set of numbers in the quarter gone by. If you could tell us what kind of led to that sort of a degrowth and how did the segments, that's the fertilizers and industrials particularly, fare in the quarter gone by?
Yeah, so as you may be knowing, the quarter one last year was a bumper quarter. So we 22-23 we earned a record profit. So that was an exceptional performance. This quarter, some subsidy reduction impact and some inventory, high cost inventory impact is there. It is a one-time impact, and going forward, we expect performance to substantially improve. We also expect some 15 to 20% growth, volume growth in fertilizers. But margin in for industrial products are likely to be under pressure for some time.
Okay, hi, very good morning, Mr. Nanavaty. This is Shrishti joining in. So 15 to 20% growth on the volume front is what you are expecting. But margins specifically, they have seemed to be sinking below. And this higher inventory prices that you were mentioning, till how many quarters from now we can see this impacting your margins? And post that, by when are you expecting a normalization in the margin trend?
No, this was a quarter one effect, so there are no inventory impact going forward, and fertilizer margins will definitely see improvements going forward, along with the volume uptick. Margin in industrial products are going to be under pressure for at least say Q2. There is some improvement, but not reportable or not show up in Q2, but maybe from Q3 we can expect that also to be on the higher side. So otherwise, physically and as far as the demand is concerned, there are no issues on demand or production front. Everything is normal. It is only just the financial numbers are moving here and there, considering this subsidy and high cost inventory.
Mr. Nanavaty, like you said, industrials margins are likely to be under pressure in the quarter gone by. You're not seeing any issues when it comes to the demand scenario or even production scenario. So putting all of that into context, if you could tell us what sort of a growth number or volume number are you envisaging for FY24? I know you spoke about volumes, but also if you could shed some light on the margins, because you did say the industrials will be under pressure in Q2 as well.
Yeah, so as I said, fertilizer margins are likely to improve because that subsidy impact, which was coming in Q1, now mostly it is gone. And still with price fluctuating for raw material, there is a good margin to be made in fertilizers. Industrial products, I am not able to say anything concisely, but it will improve at least in the H2.
Okay, Mr. Nanavaty, and would like to know your take on the capex plans and an update as well, because what we understand is that 4,000 crores of capex was planned by the company. So what's the update coming in, and what are the plans that are on track and going ahead? By when do you see all these capex contributing to your financials as well?
Yeah, so those 4,000 crores capex are on track, and it is going on as per the plan. Some of which will be, at least one project will be commissioned in this year, and next other projects are likely to be commissioned by March 25. The details are given on the stock exchange as well as our website, project-wise details. And of course, yeah, it will turn around the company in terms of top line and bottom line when everything is in place, definitely. Maybe next time we can talk about the numbers in this front.
Point taken, Mr. Nanavaty. Thank you so much for joining us on the show and being very candid about what actually transpired in the quarter gone by, and as well as where you see growth going ahead for your company in Q2 as well as in FY24. And that was Mr. V.D. Nanavaty of Gujarat State Fertilizers and Chemicals, talking about the demand scenario, the volumes, the capex plan is on track. Yes, industrial volumes, industrial margins are likely under pressure, is what he's noted in this interaction. And that is GSFC for you, down about 4% in today's trading session. But on that note, viewers, we'll actually slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll start taking all of your stock related queries, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us on the WhatsApp number that is flashing on your screen. Do remember to mention your name, the stock that you're looking to invest in, mention the name of the stock as well. And if you've already invested in the stock, then do mention the buy price, the quantity, as well as time horizon that you're looking to hold on to that particular counter. In that way, our experts will be able to help you better. And talking about our experts today, as always, we have Kunal Bothra joining us on the show, as well as we have Rajesh Agarwal. A very good morning to both of you. Good morning, Kunal, once again, as well as Rajesh. Thank you so much for joining us on ET Now and on Buy Now, Sell Now. Let me first take the first query on the show, and this one is from Geetha. She's writing to us from Dubai. And Kunal, this one is for you, and she says she has two questions for you. One is on HUL. She has 100 shares purchased at 2,316 rupees per share. And the other stock is Jubilant FoodWorks, 550 shares at a price of 502. She wants to know what should she do with these counters for the medium to long term. No doubt it's a longer term horizon query, but she wants you to answer it for her.
Well, for Hindustan Unilever, I think the stock seems to have come back to an oversold territory on the charts. Now, oversold territory doesn't typically mean that you'll see an immediate bounce. But then there are times when the stock takes a process of maybe 1 or 2 weeks to try and form a bottom for itself. But once that bottom formation process gets completed in a matter of 1 or 2 weeks, we expect the stock to start trending up higher, and that trend lasts for 3 to 6 months at least on the upside. So I think we are nearing that ending phase of correction for HUL, at least on the short term charts. So I would probably expect that if you've already bought or you're holding, you should continue to hold on to the stock price. If you're looking to buy, could be a good starting point at current levels. And same would be the case for the other stock which you mentioned was Jubilant Food. Yeah, even that stock has confirmed a breakout. In fact, yesterday we were discussing this, that how the stock has broken past above its 200-day moving average after a gap of almost 9 or 10 months. I think in September 2022, the stock had broken below its 200 DMA. It's surpassed or broken past about those levels yet again, which means that the trend seems to have resetted on the upside for Jubilant Food. Would be bullish on the stock, and with a time frame of 6 months to 1 year at least, I would expect 600, 615 as a potential target for the stock.
Okay, moving on to the next one, and Rajesh, coming to you for this. The question is from Satya, and he's holding two counters. Firstly is Reddington. He bought the shares from a price of 160 rupees, and he also has Sterling Tools from a price of 352 rupees. He wants to hold these names for a longer term period and wants to know at what price he should average out these names and invest more in the same.
Good morning, Srishti.
Good morning.
Both the counters are good for a longer term horizon, although they are on the mid cap category. Especially Sterling Tools can be a very good buy at this point of time, also at 350, 340 odd levels. I think it has a potential to go around 420 in the next 2 quarters or so. As far as the Reddington is concerned, I would say wait for some more correction, maybe 10% below the current market price. That's on 140 odd levels would be a good level to buy.
This next one is coming from Ravi. He's writing to us from Mumbai. And Kunal, he has 2,000 shares of Gabriel India at a price of 197 rupees per share, and also 2,500 shares of Federal Bank at the price of 124 rupees per share. He wants to know on the short term, what sort of target and stop loss should he keep for both these counters?
So I think for Federal Bank, you can probably keep a stop loss of 131 on closing basis. That's been a support zone for the stock price. It's gone below 131, but then somehow on closing basis, the stock has recovered and not closed below those levels. So that is a stop loss which I would suggest for Federal Bank. For Gabriel, this could probably be a point where the stock looks to be getting into a turnaround. But then, looking at the market structure, it's always better to try and have a stop loss in place. For Gabriel, I will probably keep or advise a stop loss of 215 again on closing basis. If the stock closes below this level, you can look to exit. On the upside for Gabriel, you can look out for targets in the range of 245 to 250, and for Federal Bank on the upside, you can keep a potential target of 140 plus.
Okay, moving on, and Kunal, once again coming to you because the query is from Rajesh Maheshwari and he wants a short to medium term outlook on HDFC AMC. He has bought 50 shares at an average price of 2,810 rupees. So what to do in this particular name? He's sitting at a loss in this one.
So it depends on your time frame. If you're okay holding the stock say for another maybe 6 months or so, then there is a hard chance that the stock may restart a rally and then come back to that 2,800 levels. So what has happened is in the last 4-5 months of this price rally for HDFC AMC, the stock has broken past above a major resistance which was around 2,200, 2,250 mark. Now that confirmation itself could be a strong indication that the medium term trends have reversed on the upside. But it's just that the stock is going through a patch of a pause. Sometimes the pause could be extended to 3 months, 6 months as well. And in that 3 or 6 months, there is bound to be a phase where the stock may get into an odd correction. So if you've bought at higher levels and if you're okay holding on for another 6 months, then I think you should consider doing that for a potential target of 2,800 at least.
Okay, this next one is coming from Ayush and he has Gujarat Fluoro at a loss of about 10%. He wants to know whether he should exit this one and look to enter Bank of Maharashtra or stay put for some sort of a recovery. And he also wants 1 year target. So Kunal, what's your take on Gujarat Fluoro? He's not told us his buy price, but definitely told us 10% loss is what he's sitting at.
So I would suggest that keep a stop loss of the previous swing low for Gujarat Fluoro. I think 2680, if I'm not wrong, was the double or the support the stock had tested. So maybe keep a stop loss of 2650 on closing basis as an additional buffer. And I think if the stock closes below those levels is where you can look to exit. Maharashtra Bank or Bank of Maharashtra on the other hand, I think is also a good stock. I've been advising many of these PSU banking stocks as a better alternative because these stocks are showing signs of confirmation of a breakout from where they left off in 2022 and after 3 months of correction post that second half of 2022 rally for these PSU banking names. So if you have a longer term time frame, then I think you can consider buying Bank of Maharashtra and many of the other PSU banking stocks which have been looking very attractive.
Okay, Rajesh, the next question is from Gopi Nath from Hyderabad and he's holding shares of Menon Bearings. He has 200 shares from a price of 99 rupees and almost at a profit of 30-40% now. And he wants to continue this holding for the next 2 to 3 years. So what's your outlook and what will be your advice?
Are strong, and at this point of time, auto ancillary and this space is doing very well. I think one can continue to hold. The only problem with this counter is low liquidity. There is no liquidity at all. But since you're a long-term investor, I don't think liquidity would be a major concern. As far as 2-3 years is concerned, I would say keep tracking quarterly numbers. If the company is performing quarter on quarter, no point in selling in the stock. You can continue to hold, but please keep track of numbers.
I'm clubbing actually 4 queries here and all of them are on Gland Pharma, and I will request both of our experts to speak on it because some of them are for longer term horizon, some are for short term. So let me take this one. One is coming from Pushkar Saxena. He's writing to us from Bihar. He has 30 shares at a price of 1,025 rupees per share. Wants to know what's the future prospect of Gland Pharma. The period is 2 to 3 years. The next one is coming in from Sunny. He has 40 shares of Gland Pharma at 890. Kunal, he wants to know whether he should wait for some more upside on this particular counter. I also have Jaya from Bangalore asking a similar view on Gland Pharma. Her buy price is 1,660, as well as this one is coming in from Ramamurthy from Bahrain, and he wants to know whether he should book partial profits in Gland Pharma and instead go ahead and put their money in Cipla because he's in 40% profit in Gland Pharma. Which one of you will want to go first when it comes to Gland? I think actually Kunal, you should go first because you have 3 queries, 3 of them asking what should they do now with Gland Pharma. Some of them, the buy price is at a higher level, but most of them are making profits right now.
Well, yeah, so I think if you're clearly making profits in the range of say 20%, 40% for a stock like Gland Pharma, then I think it makes a lot of sense to book out profits over here. The only catch which I have with this stock is its odd tendency. And I've been tracking this stock since the last few quarters, that whenever it goes into that 20% uptick, Post that, the stock goes into a sell-off or a corrective mode. It then goes into, sometimes the correction has led into the stock making a new swing low, which may not happen this time around. But then even if the stock gets into a correction, you would probably lose the advantage of sitting in profits of more than 20-40% for the stock price, because the corrections could be very sharp for a stock like Gland Pharma. So it's a good chart. It's an evolving name. The stock has come out of one of the worst phases for itself in terms of the price correction. But then because of the recent up move, I would believe that if you're sitting on such heavy profits of 30-40%, it's good time to take out profits.
Alright, good time to take a profit in case you are actually sitting on hefty profits when it comes to Gland Pharma. Rajesh, what's your take on Gland Pharma? Looks like things are now actually working well for this particular company, given the fact some approvals coming in, given the fact the numbers were good. Do you think that this sort of a result or reaction merits a long-term wait on this counter?
See, this is a very good company, I would say first. It's a big player in injectables. I think one of the largest in injectables. The only concern with this company was the Chinese promoter Fosun. For that reason, there was some selling pressure. And then last 2-3 quarters, numbers were pretty bad. And for that reason, we see a lot of correction in this, almost 50-60% from the recent highs. Now, the numbers have been good. Approvals have come, as you said. I think for a longer-term player, longer-term investor, this is a very good time to even add. But as Kunal said, it has run up quite a lot in a very short span of time. I won't advise this for a short-term buy, but for a longer-term horizon, yes, one can buy. And somebody asked whether one should sell this and buy Cipla. I would say Cipla any day is better than Gland Pharma on all parameters, but still, I won't say that Gland Pharma is bad. You can hold both of them.
Hold both of them, but Kunal, I have a viewer who's actually messaged me right now, and that is Sunny, and he's saying that Gland is 2 times for him. He's saying it's very difficult to go ahead and book profits. What's your advice for such viewers who actually get too greedy and want to keep it on for a long time, hoping that they'll make more money?
No, I think it makes, so I understand what he's trying to state, but then in such kind of a scenario, in such kind of a stock, it makes sense to book out at least 50% of your profits, take your capital out and let your profits run. So if you are confident that the stock would move up higher, say with a slightly higher time horizon, then it makes a lot of sense to book out your initial capital, or at least 70-80% of your initial capital, because that would drop down your cost price or your net cost price significantly lower. So in case if the stock corrects, that could add to buffer for yourself. But you should never lose out the advantage of sitting in a profit of almost 80-100% if you've gotten that in Gland Pharma. So I would probably take it with both hands and at least book out 50% profits, if not more.
Okay, so that's the technical as well as fundamental advice. So, and the overall view on Gland Pharma by both of our experts. So let's move on. And the next stock, Rajesh, is BSC. This question is from Shyam from Nasik, and he's holding 150 shares from a price of 555 rupees. What's the outlook going ahead, and what should be the course of action?
Sorry. It's a buy from our side. We have been given a buy call since very long period of time, and it's almost double from our call. The company's market cap is around 11,000 odd crores, out of which they hold 3,000 odd crore value in CDSL. Then they have 3,500 odd crores in bank and cash balance. They are the largest player in Star mutual fund platform, that's Star Mutual Fund, one of the largest in SME platform, first mover advantage in INX stock exchange, that's international stock exchange. I think in all parameters, this company stands out. And the best part, it's debt free and no issues of corporate governance. Yes, it has run up quite a lot in a very short span of time, may find some consolidation or correction going ahead. Even the buyback, which was announced at 816 odd levels, has I don't think that would materialize anytime soon, because the current market price is 920. One can hold for a longer period of time, and any dips should be taken as a correction. Any correction should be taken as an opportunity to buy.
Right. This next one is coming in from, one second. This one is for you, Kunal, particularly, and this one is coming in from Ashok B from Chennai, and he wants to know about Nifty Bank and Nifty Futures. Is it good to go short in August expiry is what he's asking. The target for Nifty 19,000 and Nifty Bank is 43,800.
So, in fact, I've just tweeted about it that both of the indices, Nifty and Bank Nifty, they are forming a head and shoulder pattern on the daily charts. But the concern with this head and shoulder pattern is that tomorrow we have a major event in terms of the RBI monetary policy, and having a head and shoulder pattern or a bearish pattern at such a key event may probably play out or may not play out in terms of the event, because in case of the indices, say for example, goes into a correction, but post the RBI policy, if the indices get into a recovery mode, then we may expect that this could actually be a formidable bottom at place for both the indices. So I would ideally wait out for the event to pass out and then take a call. If the indices break below the levels, say 90,300 for the Nifty and 44,450 on the Bank Nifty, both those levels are very critical in terms of support. Only a break and a close below these levels, if it happens tomorrow post the policy, is where I would consider that the markets or the trend has reversed for the indices, and then we could be looking at a sharper correction. But till then, I would probably expect that there could be a minor consolidation which has been going on.
Okay, so that's the take on the markets, and the RBI policy event and the outcome of that and how the markets react will be the key to watch. But with this, viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back in order to take more of your stock related queries, so stay tuned.
जल्दी ऊपर लाएगा वहीं जीतेगा हर गेम में चैंपियन जैसी पकड़ वही एसआरएमबी टीएमटी
Welcome back to Buy Now Sell Now show, where you get answers for all your stock related queries, and to answer the same today we have Kunal as well as Rajesh with us on the show. And Kunal, coming to you for the next query. This one is from Srinath from Chennai, and he has 500 shares of Adani Ports from a price of 765 rupees. Just yesterday the results came in and the stock was quite volatile post that. So at this point in time, should he move out or rather book profits in this one, and what are the short-term prospects for this one?
See, I would be bullish on Adani Ports. I think this is one of the much better names from the Adani group of stocks, because of the way the stock has been historically more stable, relatively moderate beta, which is a very rare kind of a phenomena for most of the Adani group of stocks. And also, I think to add to that, look at the way the stock has panned out in this last 7-8 months of this calendar year. After a sharp sell-off in the first couple of months of 2023, the stock has gone into a gradual recovery, and gradual recoveries are always more sustainable as compared to a flash rally or a V-shaped recovery for the stock price. So I would believe that it could be a matter of time the Adani Ports may come back to that 900-950 mark. Because of the low beta nature, it may take maybe another 6 months, maybe another 1 year. But then because of the recovery the stock has seen in the last 6 months, and after this major sell-off the stock had shown, I would expect that this is a stock which you should definitely look to hold.
Okay, Kunal, one more coming your way. This one is from Swapan Saha from Kolkata, and he has 75 shares of GSK Pharma at a price of around 1,410 rupees. He basically 410 rupees per share, that is. He's saying that he's holding this particular counter for the last 2 years. He wants to know whether he should continue to hold on to it for some more years or look to sell or shift to other stocks by booking partial profits.
I think you can continue to hold on the weekly chart specifically. The stock has formed a bullish flag pattern on the charts, and I think that flag pattern breakout is around 200 to 40 points for Glaxo. So which means that potentially if this flag pattern gets successful, the stock should come back towards 1600, 1650 mark, and because of the low beta nature of the stock price, it may take maybe another 6 months or so for the stock to reach those target levels. But I believe that you should look to hold on to the stock, because if this trend breakout shapes up well, then we could be at the cusp of a big turnaround for Glaxo as well. So I would suggest a hold as of now.
Okay, moving on, and Rajesh, the next query is from Ram, and he has bought Care Ratings, 500 shares from a price of 450 rupees. What he's saying is that he bought these counters, this counter during the lockdown period and during the COVID time. So at this point in time, what to do? Will you suggest booking profits in this one?
Yes, of course. One thing, we should book profit in Care Rating and switch to some better names, maybe in the BFI space. There are a lot of names which are trading at an attractive valuation, I would say. At the K rating, I don't think it will go anywhere in a very near future. It's better to book profit, and if somebody wants to be in care, maybe a lower level would be a good point to enter. But at this point of time, it's a sell.
All right, this next query that I have is coming in from Sagar. This one is for you, Rajesh. He has Sarah sanitary ware in his portfolio for a decade now. He's saying he's already holding this particular counter since the price of around 100 rupees per share. He's saying that he did not expect the stock or the company to do so well. Now he's asking you, do you anticipate that the growth story will continue in Sarah going ahead? Or do you think that there is any other better stock which will be a better turnaround story and is available at a good price point right now?
See, as long as Sarah is concerned, I think it's a better company. You continue to hold, sitting in a good profit. It's a big name in sanitary ware, and the kind of traction we are witnessing in the real estate sector as a whole, I think these kind of companies are going to do well. And not to forget, gas prices have gone down, which is one of the major factors for this ceramic and sanitary ware type of company. So it's better to hold on to Sarah rather than switching to some other name.
Kunal, the next query is from Madhuri, and what she is looking for are two names from the real estate packs, and what she's wanting is that based on the long-term charts, if you can suggest two real estate stocks where she can invest for the next 2 to 3 years, assuming one name could be DLF?
Yeah, one name could be DLF, the other could be Anantraj Industries even at current levels. Or else if you're looking to add two more, then I think Godrej Properties as well as Oberoi Realty, both of them are also looking very attractive on the charts. Real estate is a very high beta pocket, and I've seen historically that that these stocks, they tend to move in tandem in terms of the price performance. There may be few stocks which may be outperformers for a certain period of time, but then when you look at the aggregate returns over a period of 5 years, 10 years, or maybe such kind of time horizon, then the returns could probably normalize for these stocks on an average. So it really would not make sense to over diversify from the real estate pack. Two stocks which I would believe that holds a lot of potential on the charts, and something which I've been recommending since the last, I think, maybe 1.5 odd year, DLF as well as Anantraj Industries.
All right, moving on then, this one is coming in from a viewer who's been writing continuously and not been able to take his query. This one is from Venkat, and he has 75 shares of APL Apollo at a average price of 1,186 rupees per share. He is sitting on a good 24% profit in this particular counter, and he really wants to keep the stock for the longer term. Kunal is saying, but the stock has been falling over the past few days, so he wants to know, should he grab this opportunity to go ahead and add some more of APL Apollo? Also, he wanted to know why such a sharp fall in this counter. Are the charts indicating something?
Well, I think the stock was overbought at that 1600 levels, which it tested on 31st of July 2023, and from there we've seen just a trimming off of the gains from 1600 levels to 1500 mark. The longer term trends have been excellent for APL Apollo. I remember, I think, tracking the stock when it was almost at 750, 800 in a few years back. So it's done exceptionally well in that time frame, as well as over the longer term charts even prior to that. So I would suggest a hold. This could be a normal correction because of the overbought nature of the charts. And once the mean reversion happens for the indicators after such a kind of an overbought nature, the stock should resume the uptrend for itself.
Okay, Kunal, once again coming to you, because this query is specifically for you from Venkat Rao, and he's been holding shares of L&T Finance from a price of 143 rupees, but he bought these shares back in 2017, and till date he's sitting at a loss. We have seen recovery in this particular counter, but he's still at a loss. So what to do at this point? Any advice to average out?
Well, not an immediate average out, but I think yes, you can consider the stock, in fact, hold the stock currently as of now. The breakouts for L&T Finance are quite prominent in terms of the charts, in terms of time frame, on the quarterly charts, on the monthly charts. The stock has shown exceptional price performance. In fact, if I'm not wrong, on a YTD basis, the stock is up some 44%. It was up some 50% plus, when the stock was at 135, 140 levels a few weeks back. So it's done exceptionally well so far this year, but the stock has a history of going into multi-years of uptrend, multi-month of uptrend post such kind of a strong up move. So maybe a time where the stock is consolidating, maybe another 5 rupees, 7 rupees on the downside, which we can expect for L&T Finance in this phase of consolidation. But I believe that with this price performance and the resurgence the stock has shown this year, there should be a significant upside left for L&T Finance.
All right, next query is from Puneet, and this one also is for you, Kunal. He wants a 3-month target for Coal India.
Not too much bullish on the stock price. In fact, I would expect Coal India to actually underperform because it's been one of the underperforming stocks in the last 5-6 weeks of the price history. Now the stock on the upside has resistance at 245. 240, 245 is a huge resistance for Coal India, and the downside 225 seems to be a major support. So I don't expect too much of an up move, and if the range stays on, then I think for the next 3 months you can expect a very similar upside, max 240 to 45 for Coal India.
Okay, Rajesh, two names where Seema is seeking advice. Firstly, it's HCC. We are seeing a great move in this particular counter, up around 15% in trade right now. So is this a good bet for the medium to long-term perspective, as well as Lloyd Steel? Just yesterday, we have seen results coming in. So how is this counter for the medium term?
See, both of these stocks I would not suggest to buy at this point of time. If anybody holding can continue to hold. And I don't talk on technical, but both these counters need strict stop losses because fundamentals are seeing a turnaround. But whether they would sustain or not, it's a big question. It's better to avoid these kind of stocks in such kind of bull. So it's a avoid from my side, both of them.
He's coming from Sandeep. He's writing to us from Tamil Nadu, and I will ask the question the way he's written. He's told me ask this straight to Rajesh sir because I'm a big fan of him, and he's saying that he's reshuffling his portfolio. He has already sold Cipla with 25% profit, L&T with 15% profit. Now, what's the best alternative in the same or the other sector to hold on for the next 2 to 3 years in the portfolio? You want me to repeat the query to you, Rajesh? Oh, I think we've actually got a technical glitch in that particular front. We've lost Rajesh's feed, as in the audio feed. We will actually come back and ask Rajesh that question. But for now, we slip into a break on this edition of Buy Now, Sell Now. And when we come back, we'll continue taking your queries, viewers, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's continue from where we left before we hit the break. Rajesh, the query to you was from Sandeep. He said that he sold Cipla at 25% profit, L&T at 15% profit. He now wants to know which is the best alternative in the same or other sector for holding for a period of about 2 to 3 years in the portfolio. What's your take?
See, first, I would say both Cipla and L&T qualify for holding for a longer period of time, maybe 3-5 years down the line. So if there is some downside in these stocks, one can buy them. Now coming to another stock which can be held for a long period of time, and in the large cap space, we have very good names like, I would first, in the pecking order, I would go with Reliance, which I think can give phenomenal return once some corporate action regarding to demerger of Reliance Retail, Jio, and all those things happen. They are moving into new territories like hydrogen and all. So this is a very good story which should be accumulated for a longer term horizon. The second one, as you know, would be ITC. One should continue holding to that, even buy that stock in lower levels. Third one would be SBI, which I think can give very good return. And the fourth one would be Mahindra and Mahindra.
Okay, so those are the top recommendations coming in from Rajesh, and ITC once again making into the list. But Rajesh, once again a query for you. This question is from a retired army officer, that is Colonel Gorpade, and from Bangalore, and he's a long-term investor and he's been holding shares of Balme Lorry. Back in 2017, he invested at a price of 132 rupees and not at a great profits currently after holding for so long. So at this point in time, would you suggest for a hold, sell, or maybe average out this counter?
See, if time is not a constraint, one can continue to hold. It's one of the best lubricant company. It has container freight stations, intra-logistics. It's a good play. It's a PSU company, long-term buy, and it's a good dividend yield stock also. I would suggest a hold on to this stock. And somebody wants to put new money in this company only, then I would suggest go for Bama Lorry Investment, which is a holding company of Bama Lorry. and the dividend yield and that company is around 6-7%. So both of these stocks are a hold from our side.
All right, the next query that I have is coming in from PGK Raju, who is a senior citizen. He's a retired banker as well, but he's an investor right now. But Kunal, his query is on a short-term one, rather. He's holding GIC-RE about 1,500 shares at a price of 193 rupees per share for the last 2 months. He wants to know what sort of an outlook do you have for this counter in the short term?
See, in the short term, the stock has been taking major resistance at the 212 mark. In fact, in the last 7 trading sessions, the stock had tested this 210, 212 range 5 times on an intraday basis, and on all of those 5 attempts, the stock had seen some selling pressure, which means that if you're sitting on short-term profits of 15 rupees, or then I think closer to 210 odd mark is where you should look to book out profits for GIC-RE. And then look to buy back again if the stock gets into a correction, because it looks like that the stock would get into a time-wise, is already going through a time-wise correction, and this correction may probably extend for another couple of weeks before we expect the markets to also get into a turnaround. So 210, 212 could be a point where you may look to book out short-term profits and look to buy back on dips.
Okay, once again, Kunal, coming to you, this query is from Ananda, and before that, Cheryl, there's a note that he's requesting that ladies do not wear the red color. So we'll try and we'll figure out that one. But Kunal, he's at a loss in ITC. He's actually holding 2 futures lot of ITC from a price of 469 rupees, and we have seen like that the stock was very close to that 500 mark and then drifted lower all the way to 450 now. Any hopes on ITC by the expiry? Any hopes on recovery in this one?
So I think now ITC has become more of a special situation stock because of the demerger news which has been announced by the stock. So maybe I think the downward drift is on the back of the news flow which is surrounding for the stock price. I'm not sure that that what could be the nitty-gritties of this demerger and the effect on the stock price. But then looking at the structure for ITC, I would expect that the stock may drift towards the 440 mark as well. So from a very short-term play, there could be a chance that the stock may drift down towards 440 levels. So it's better to hedge your portfolio or your holdings on ITC in terms of futures. You may probably do that by buying a 450, which is at the money put option for the stock.
All right, and with that, let's actually kickstart with the rapid fire. The first one is coming from Nagaraj. He's a senior citizen from Bangalore. He's holding 200 shares of HGS Global at an average price of 1,000 rupees per share. What are the prospects of this particular counter? Rajesh, going ahead, should he stay put or move out?
Stay put, continue to hold.
Okay, Kunal, what's your take on West Coast Paper? Balu wants to know, is this a good time to enter in this one?
I would suggest to buy the stock at current levels or to enter the stock at current levels.
Okay, 400 shares of Shah Metallics at the price of 289 rupees per share. What sort of a strategy should Sunny use for this one? Stay put with this or exit?
Exit, book profits.
Okay, Kunal, the next query is from a viewer. I didn't get his name. He's holding Indiabulls Housing Finance, 100 shares from a price of 152 rupees. Wants to know the short to medium term outlook.
Hold from a short term play. The momentum continues and the stock may come back towards 175 mark at least.
All right, this one is coming in from Vishwanathan Nair. He wants to know about Sigachi Industries. Kunal, 100 shares at a price of 322 rupees per share. Right time to go ahead and exit this one?
Hold is what I would recommend.
Okay, Rajesh, the next query is from Narveer, holding 1,000 shares of BPCL from a price of 426 rupees. Already been holding for the past 2 years. So what's the outlook going ahead?
Continue to hold. This quarter numbers have been good dividend. Hold.
Kunal, 2 pharma stocks for a period of 1 to 2 years. Pratiksha is asking from Muscat.
Glenmark and Zadis Life.
Okay, Kunal, what's your view on Linde India? The viewer once again didn't mention his name, but he's at a profit of 15% currently. Any advice to add more?
Yeah, you can look to add at current levels.
FDC is the stock, Kunal. Padma Siva Rao from Bangalore has the stock at the price of 340. Was a near-term target?
Excellent chart. The stock has confirmed a breakout of a multi-year time frame. Would look out for at least another 10% upside.
Okay, Rajesh Vidya is holding 60 shares of Colpal at an average price of 1,620 rupees for the past 2 years. So at this point, book profits or continue to hold on?
Continue to hold. The numbers have been good. Strong balance sheet. Continue to hold.
Squeezing in one last at the last second. This one is from Umesh Gupta. Cummins India, 1 to 2 years. Time horizon, Kunal, right time to buy.
Yeah, very good time to buy the stock. On the short-term chart itself is oversold, so I think it could be a good time to buy the stock.
Okay, but with this, viewers, we are completely out of time in this edition of Buy Now, Sell Now. Kunal as well as Rajesh, thank you so much for joining us today and helping all of viewers resolve their stock-related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put the show together. But don't go anywhere. Markets at noon will take the action ahead.